I don't blame China. I don't blame Vietnam. I see their meeting today. Is that wonderful? That's a lovely meeting. They're meeting, like, trying to figure out how do we screw the United States of America.
Breaking news. U.S. airlines are on the edge as Boeing faces canceled orders worth a staggering $50 billion, all triggered by trade war tariffs. The collapse of America's aviation giant is no longer just a nightmare headline. It's unfolding in real time. That's the story racing through social media feeds and investor chat rooms. Boeing, once the crown jewel of U.S. manufacturing, is under siege. Airlines are panicking. Orders are stalled, and tariffs are tearing holes in the company's global order book. But how much of this $50 billion cancellation is fact, and how much is fear-driven exaggeration? Let's dive in. The rumor began when reports surfaced that China had halted deliveries of Boeing jets. Beijing ordered its airlines to stop receiving new planes as trade tensions with Washington escalated. Instead of flying proudly into Chinese skies, dozens of brand-new Boeing jets now sit idle, parked at U.S. facilities or rerouted to other customers. For a company that depends heavily on China, historically its single largest overseas market, this was a seismic shock. At the same time, European budget giant Ryanair issued its own warning. If tariffs raised the cost of Boeing aircraft significantly, the airline would look elsewhere, even to Airbus, its historic rival. Ryanair's order book is massive, hundreds of aircraft worth tens of billions. The prospect of those orders being canceled or diverted added fuel to the fire. That's how the number, 50 billion canceled, began circulating. But here's the truth. As of now, there has been no official confirmation that Boeing has lost 50 billion in orders outright. What has happened is serious delays, suspensions, and threats. Chinese airlines aren't taking deliveries. Ryanair is rattling sabers, and Boeing is scrambling to juggle planes, shifting undelivered jets from one customer to another. The cancellations may not be on paper yet, but the threat is very real. For U.S. airlines, the situation is a nightmare. Delta, United, and American Airlines rely on Boeing for a large portion of their fleets. Every delayed delivery ripples through their schedules, their capacity planning, their bottom line. With tariffs making supply chains more expensive, the cost of maintaining and expanding fleets is soaring. Ticket prices may follow, leaving consumers footing the bill. And for Boeing itself, the numbers are brutal. The company already has a backlog worth over $500 billion. Orders waiting to be fulfilled, tariffs, delivery freezes, and customer hesitation threaten to eat away at that backlog. For a firm still recovering from the 737 MAX crisis and production issues with the 787 Dreamliner, this is a devastating blow. Boeing's stock has swung wildly. Investors nervous that the company can't keep pace with Airbus, its European rival, or COMAC, China's fast-growing state-backed competitor. The trade war is at the heart of the chaos. Washington, under Trump, has leaned heavily into tariffs as a tool of leverage, slapping duties on everything from steel to lumber, copper to seafood. China has retaliated in kind, targeting American exports like soybeans, semiconductors, and now, effectively, aircraft. By freezing Boeing deliveries, Beijing isn't just making an economic statement, it's making a geopolitical one. America's most iconic exporter can be squeezed. The irony is painful. Aircraft aren't like soybeans or copper. They can't just be redirected overnight. Building a plane takes years. Each one is customized for the buyer. When deliveries stall, billions in revenue vanish. Workers sit idle and supply chains jam up. Boeing employs over 140,000 people directly and supports hundreds of thousands more through suppliers across the U.S. Every disrupted delivery threatens jobs from Seattle to Wichita. Critics argue that Trump's tariff strategy is backfiring spectacularly. Instead of protecting American industry, it's undermining one of its crown jewels. Boeing needs access to global markets, especially China, where passenger growth is booming. If those doors close, Airbus and COMAC step in. Already, Airbus has scored massive orders from Chinese carriers. COMAC, with its C919 narrow-body jet, is pushing to fill the domestic Chinese market. Boeing risks being shut out entirely. And yet, the political theater continues. On stage, Trump boasts about defending American workers and punishing foreign cheaters. In practice, those workers are watching their orders evaporate. For airline CEOs, the contradiction is maddening. They're told tariffs make America strong, but the result is fewer planes, higher costs, and angry passengers. The ripple effects don't stop there. U.S. airports, anticipating growth, are investing billions in new terminals and runways. But if airlines can't get the planes they ordered, those investments stall. Tourism, cargo, business travel all depend on a steady flow of aircraft. Disrupt that flow, and entire industries tremble. Meanwhile, Boeing's competitors are thriving. Airbus continues to expand its order book, snapping up airlines spooked by Boeing's instability. In China, COMAC benefits from nationalistic support. Airlines under pressure to avoid Boeing now proudly place orders for domestic jets. Even Embraer, Brazil's smaller manufacturer, is eyeing opportunities as Boeing falters. The collapse narrative isn't entirely fair. Boeing isn't going bankrupt tomorrow, but perception matters. If airlines believe Boeing can't deliver on time, if investors believe tariffs will cripple exports, confidence drains away. That's how collapses begin, not with one giant crash, but with a steady erosion of trust. And here's where the 50 billion figure, even if exaggerated, stings. In the aviation industry, rumors shape reality. If enough buyers believe Boeing has lost 50 billion in orders, they start to second-guess their own deals. They delay, they hedge, they talk to Airbus. A rumor becomes a self-fulfilling prophecy. For ordinary Americans, the consequences are tangible. Expect higher ticket prices as airlines struggle with capacity. Expect fewer new routes as deliveries stall. Expect job uncertainty in manufacturing hubs that depend on Boeing. And expect a ripple into the broader economy. Aviation is a cornerstone of global trade, connecting people and goods across continents. Weakness here signals weakness everywhere. The question is, can Boeing survive the storm? History suggests resilience. After 9/11, after the 737 MAX crisis, after countless recessions, Boeing always clawed its way back. But this time, the headwinds are political, not just technical. Tariffs, trade wars, and geopolitical rivalries are harder to fix than faulty software or supply chain glitches. They require diplomacy, trust, and long-term vision. Qualities often in short supply on the campaign trail. And what about U.S. airlines? For now, they'll limp along, stretching the life of older planes, paying more for maintenance, juggling schedules. But their growth, the promise of cheaper, more plentiful flights, is at risk. A shortage of planes means fewer choices and higher costs. For passengers already frustrated with crowded flights and rising fees, this could be the breaking point. In the bigger picture, this is another chapter in a disturbing trend. America's trade wars aren't just inconveniencing allies or rattling markets. They're weakening the very industries that symbolize U.S. strength. Lumber, copper, seafood, all have faced backlash. But Boeing is different. Boeing is iconic. Its planes carry the American flag on tails around the world. If Boeing falters, the image of U.S. industrial dominance falters too. So, is it true that 50 billion in orders have been canceled? Not yet. But deliveries have been suspended. Orders have been threatened. Airlines are nervous. And the more tariffs bite, the more likely those threats become reality. Which leaves us with a chilling conclusion. The collapse of Boeing isn't a sudden explosion. It's a slow-motion unraveling. Each tariff, each delivery freeze, each warning from an airline chips away at its foundation. And unless Washington changes course, the rumors of 50 billion losses may soon look less like exaggeration and more like prophecy. For now, the planes sit idle, the factories slow, the airlines juggle, and the passengers wait, caught in a trade war that has turned the skies into yet another battlefield. Breaking U.S. Airlines under strain, Boeing fighting for survival, and a 50 billion shadow hanging over the future of American aviation.